Hello, everybody. Today's our topic is income from investment and property. Is the chapter number 3 from personal taxes, and this is a very important chapter from AAT perspective, exam point of view. So let's start. So income from property and investment. So today we will cover. Uh, Identify and calculate taxable investment income, identify exempt investment income, and change in investment income to make them more tax efficient, and calculate profit and loss from property. Yeah. So let's start. So investment income. Uh, Investment income, there is a savings income, dividend income. So savings income, for example, national savings and investments, and also interest from your UK bank accounts. So if you remember the template from my previous lectures, all the saving incomes we need to show separately. And the dividend income is any income from the shares and stock that the money that you have invested. There are some income that is exempt from tax perspective. So you need to remember from your exam point of view, the MCQ question can come. Interest and dividends from individual saving accounts, ISAs, are not taxed. Interest on national saving and index-linked saving certificates and national saving and fixed interest saving certificates are exempt. So let's see an example to understand more. Martha received the following investment income during 2020-21. So what we need to do is we need to see here which income is taxable and which one is not. Yeah. So bank interest 120, yes, it is taxable. Building society interest 535, yes, it is taxable. Interest from an ISA 95 pound, no, it is not taxable. ISA dividend is 185 pound, will go under dividend. Yeah, 185 dividend section. And dividend from an ISA, again, it is not taxable, 225. National savings account interest, no, it is, yes. So it will go under savings income. Yeah. Index linked savings certificate interest, it is exempt. Yeah. So in this way, if in exam you get the question, you need to know which one are exempt, then you don't need to add this one for the income tax computation. Yeah. Assessment tip, watch out for exempt investment income in the exam and do not include it in the income tax computation. Joint investments. If spouse owned investments jointly, both of their names are on the account or share certificate, any income received is taxed on them equally by 50%. So ISA's annual limit is 20,000 pound. Up to 20,000 pound is you can invest in a year in ISA's. So there are two types of ISAs. One is cash ISA and the other one is stock and share ISA. What is the difference? So cash ISAs are simply you invest in the banks or building society, and interest received from this one is comes under your savings income, and anything that's you invest in stock exchange and shares, yeah, and this one will come under dividend. So here there are two different examples. Cash ISAs, for example, if you have invested 14,000 pound in May 2020, then the total, the 6,000 pound you can more invest, 20 minus 14,000. Similarly, stock and share ISAs, if you have already invested 8,250, you can invest 20,000 minus 8,250, 11,750. Tax planning opportunities. There is always a tax planning question in your exam. This could involve making changes to investment to make them more tax efficient. So this is an important topic. Let's see. Uh, Rogelio is an additional rate taxpayer. He recently inherited £100,000 on the death of his grandfather and put the money straight into his existing bank account. To improve Rogelio's tax position, he could move some of the money out of his existing bank account, where the interest received on the funds is taxable on him as a saving income. So he has two options. So to make this one tax efficient, what he can do is from this out of £100,000, £20,000 he can put in cash ISA, or he can put £20,000 in stock and shares ISA. So in both ways, whatever the decision he will make is he will save the tax on this one. Yeah. So the other benefit of cash ISA, it is less riskier, and stock and share ISAs is more riskier. So he needs to see which option he want to choose. Now we will come to another important topic is property income. So property income, well, let me share another important screen with you. Just give me a minute. So, yeah. So property income. So what we will start is, the first thing is, this is a template for property income. Calculate assessable property income. First thing is the rental income less allowable expenditure. We minus the allowable expenditure from our rental income and we will get the total property income. And if there is a loss on a property, so what we will do is, how we will deal with the loss? Where a landlord has more than one property, the landlord can adjust the loss of one property against another property in a same tax year. If there are no other properties to offset the loss against, or the net result from all property during the tax year is a loss, then the assessment for the year for property income is nil and the loss is carry forward. And offset against the first available profits from the property income of the same type. This means that losses from a non-holiday lets can only be offset against future profits from non-holiday lets. So if total expenses exceed total rental income, the property income assessment is nil and the excess property loss is carried forward and offset against the future property income profits only. You cannot offset against any other income, need to be offset against just through the property income. Let's see an example how to offset property loss. Mike owns two properties, yeah. So that he rents out. In 1920, he made a profit of £500 from one property and loss of £1,900 from other property. So it means £1,900 minus 500, he make £1,400 a loss, yeah, in the first year, 1920. So assessable property income in year number one will be nil in 1920. And the next year, he make a total profit of £2,600. So what he can do, Mike can do in 2020-21. So 2,600 minus this loss brought forward from 1920, 2,600 minus £1,400 will equal to £1,200. So his assessable property income will be £1,200. So in this way, he can offset the loss against the profit for this current year. Okay, the next thing is cash or accrual. If the properties, there are two things. One is cash and the other one is an accrual system. So what is cash basis is, in cash basis, we look what actually we are receiving in a year, and what we are actually spending in a year. What actually we're receiving minus what actually we are spending is equal to our assessable income for a property. But the accrual basis is, it does not matter how much we have actually received in a year. So accrual basis is uh, what we actually expected to receive in a year. Yeah, that is an accrual basis. And what actually our expenses should have to be in a year, that is accrual basis. So if the property assessable income, where property income receipts are up to 150,000 pound, we use the cash basis. If it is more than 150,000 pound, we use the accrual basis. So let's see the example of cash basis and accrual basis to make our concepts further clear. Jim bought a property and rented out for the first time on 1st July 2022. The rent of 6,000 pound per annum is paid. Alternatively, there are two options. One is quarterly in advance and quarterly in arrears. Okay, so what we need to do is calculate the property income assessment for 2022-23 and also compute the assessment if the taxable choose to use the accrual basis. So this is an important example to understand the concept of cash basis and accrual basis. So here, this one, I have already did this one to save our time. So this is cash basis, and this one, the highlighted one, is an accrual basis. So let's start now. So July to our financial year, tax year start from July and ends into 6th of April, 6th of April to 5th of April. Yeah. So July 22 to 6th of April 2023. Yeah. So because rent is received in advance, so if it is received in advance in quarterly, so what we need to do is 6,000 divided by 4. Yeah. So 6,000 divided by 4 will be equal to 1,500 pound. So 1st July, first rent we will receive, then 1st October, then 1st January, and then 1st of April. Yeah. And the other thing is allowable expenses are 300 pound in November. So we need to minus November 2022, 300 pound for redecoration, and 500 pound in May 2023. So if you look, our year ending is here, April 2023. So on cash basis, May 2023 is not in a current tax year. So we will not write this 500 pound. So we will ignore this one. And now if we look the others, if we add this total, so the total property income assessment is 5,700 on advance basis. And if we do the arrears basis on this basis of arrears, so it means we are receiving the payment at the end of the quarter. So here, so in that case, our total income will be 4,200. Now we will come to the accrual basis. Accrual basis means it does not matter when we are receiving the money. Accrual means what actually we should have to receive. So what actually should we have to receive is 500 for each month. So the total is 4,500. And then we need to minus this 300 pound expense, this one, and this 500 pound. Actually, this 500 pound, if you see here, that we paid in May 2023 is for March 2023. And this March 2023, so we need to match our income against our expenses for this tax year. So our total assessable will be 4,500 minus 800 will be 3,700. So hopefully the concept of cash and accrual basis will be clear to you. If you have any question, then you can write in the comments. I will try my best to answer you. Okay, next thing is for property income there are some expenses that are allowable and some are not allowable. Revenue expenditure, anything is allowable. It should have to be wholly and exclusively for the business purpose. Insurance, yes, allowable. Agent fees is allowable. Management expense is allowable. Cleaning, yes. Repairs, yes. Motor expenses. Motor expenses, uh, we can use the actual or the government's one, the allowance one, simplified method. Simplified method is we need to use 45p for 10,000 miles, and anything above is I think 25 pence. Yeah. So finance expenses, if you are giving any mortgage, interest on mortgage, that is not allowed. But tax relief 20% is available. So we will see the example of this tax relief. Yeah. Capital expenses, if you bought a property, you cannot reduce. It is not allowed. Improvements, not allowed. Renovation cost, not allowed. Capital allowances may be claimed for expenditure on plant and machinery used for maintenance of property. Okay, and if you have purchased carpets, furniture, fridge, freezer, washing machine, cutlery, crockery, carpets, TV, that are not allowed. Yeah. So only replacement furniture relief is available. So we will look what is replacement future relief, furniture relief. So it is furniture. Just let me change here. Replacement furniture relief. Yeah. So it's replacement furniture relief is available. So what is replacement furniture relief is, we will see this example in the next page in a minute. So let's move forward to an example. And the next one is furnished holiday lettings. Cost of furnished and furnishing qualifies for capital allowances. So furniture relief does not apply to them. To be allowable, an expense must have been incurred wholly and exclusively so already we said this one, so we will move forward now. So we will see this example now. Yeah. Okay. SIT owns a furnished property that is let out at annual rent of 9,600 pounds, payable monthly in advance. So it is in advance. During this year, he made the following payments. So what we have to do is we have to find out the property income assessment. So let's do it. So what is the property income is? So the total is 9,600 is the annual rent payable monthly in advance. So what we will need to do is 9,600 divided by 12 multiplied by 11. Why we are multiplying by 11 is because the rent is receiving in advance. So it means if it is was receiving, if we are receiving this rent, this is receiving in advance. So it means that for April to our tax year is from 6th of April to 5th of April. So 6th of April rent he has received in 1st of April. So we should not have to include that rent. Yeah. So it means our year will be 11 months, not the 12 month. Okay. The next one is insurance. Construction of a garage replacing the carport. Construction of a garage is not allowed. It is a capital expenditure. Insurance 480 pound. Yes, we need to minus this one. It is allowed. Drain 380 pound. Yes, we need to minus this one. And the next one here is a replacement furniture relief. So new cooker was replaced with a more modern cooker, and the previous cooker was sold for 50. So as we said that only replacement furniture allowance, we need to minus this 300 pound minus 50. So we will get the 250. So only the new cooker that if we are buying, it should have to be the same functionality that the previous cooker was, the previous cooker had, yeah. So this is an important point here. Redecoration work, redecoration, 750 pound, work completed in March 2023. So actually, work completed in March 2023, but we are paying here in May 2023. Yeah, so it is not allowed under cash system. If it was accrual, then yes, we have to do this one. Yeah. The tenant vacated the property during June 2022 without having paid the rent due for June. Sid was unable to trace the defaulting tenant but managed to let the property to new tenants from 1st July 2022. Yeah. So 1 minute. To new tenant from 1st July. The tenant vacated the property during June 2022 and our tax year is okay. So it is property income is 9,600 divided by 12 multiplied by 11 is 8,800. So property income is, we minus all these expenses from here, so it will be 7,690 pound. So this 7,690 pound, we will write it here under non-savings income, yeah, and we will minus this personal allowance. So it means there is no taxable income. Yeah. Let's see the other example, mortgage treatment. So mortgage treatment, as I said, that finance cost is not deductible. Only 20% relief is available. Let's see the example of this one. Yeah. Dora House has an employment income of 60,000 pound in 2022-23 and rental income received of 10,000 pounds. She paid maintenance expenditure on the property in 2022-23 of 800 and mortgage interest charges of 6,000 pounds. So property income is 10,000 minus 800 is 9,200. So property income is 9,200 and employment income is 60,000. So total is 69,200 and we will minus this personal allowance. So the total income is 56,630 pound and the tax we have calculated is 15,112 pound and no, the interest relief we have to apply. So 6,000 pound was the interest. So the relief is only available 20%. So 6,000, 20% is 1,200. So from this tax, we will minus this 1,200. So the tax need to pay will be 13,912 pound. Okay, next we will see the rent a room relief. If the tenant, if the landlord has given a room in their house, they can claim a rent a room relief. So the rent a room scheme lets you earn up to a 7,500 per year tax free. Yeah. So how we will calculate? Let's see this the template. This is a template and it will be more clear from this example if we see here. Okay, here if you see Barbara rent out a room in her main residence. Rent is 650 per month and annual expenses are 1,200 pounds. So we need to calculate the rent a room. So and we need to see which option is good for her. So rent is 1,200 multiplied 650 is 7,800 and actual expenses are 1,200 pounds. So the total property income is 6,600. But if Barbara uses rent a room relief, so 708,000 minus 7,500 because 7,500 is a relief in a year. So her property income is 300. So you can see no, Barbara can save a lot of money by using room rent, a room relief. But what she needs to do is she needs to do an election when she will do her tax return. and the time period is 22 months after the end of a tax year. So for example, tax year ending 2022-23, she needs to do by 31st January 2025. Okay. Rent a room relief. Yeah. Okay. This is our end of our today's lecture. If you have any question, you can send me an email or you can put in a comments. I will try my best to answer you. Thank you very much. Thank you. Take care. Please subscribe and like the channel to get more informative videos related to AAT. Thank you.